All right, so let's begin the show. And there is a wave of new AMCs or fund houses getting the green signal from the regulator. But the question point out here is, what are investors getting out of it? How do you decide if you should be investing your money with these companies that do not have a track record of fund management? Also, the schemes launched by these AMCs already exist. So what exactly is an investor getting out of it? Let's understand all of this and details on the new AMCs also. I have with me Arun Kumar, head of research fundindia.com. Amit, good evening and welcome to the show. So we've seen a lot of names coming in as far as AMC registration is concerned, and we are also seeing a variety of funds that these AMCs are launching. So let's just name the few new AMCs which are available now in last few months. We've seen them launching their fund management businesses.
So yeah, hi Kavita. Thank you so much for having me on the show. So you've had White Oak, which recently came in, and now we have Bajaj Finserv. I think Shriram, which was already there, is trying to again revamp their business and then again trying to scale it up seriously. So and then there are obviously a lot more people coming in. There's Helios, there is Zerodha, there is Kenneth Andrade, who's trying to launch his mutual fund as well. So you are finding a lot more players in the fray. So over the next 1-2 years, and again, Grow is also kind of they bought another mutual fund, but they're also building it up. So you're finding a lot of new AMCs already there, and a lot of AMCs going to come. So probably in the next 1-2 years, we'll at least have 5-10 AMCs newly getting added.
All right, now the question over here is, what exactly has changed so much, which is making these companies come up with their fund management business also, because the names that you've been taken are already there in the financial sector since quite a long time. But what exactly has happened that they want to launch their funds? And because it's all new for an investor, the newness for the investor is not only from the new AMC front, Arun, it's also new from investing in mutual funds front also, because that is where we've seen the number going up. Okay, so what's the reason?
Broadly, from somebody who's trying to launch a mutual fund, the broad logic is that obviously it's a super profitable segment once you scale, and you're seeing the existing AMCs, the profit numbers that they're seeing. And again, it's like it's the capital intensity. I mean, the capital required to grow the AMC after a scale is reasonably very low, very asset light. You can basically your MTM grows at 10%, and then let's say your salaries increase by 5-10%. So by nature, it's a 15-20% growing industry. And again, if you look at it, the ROEs are very high. So structurally, it's a good business to be in. And the second part is that you're also seeing the SIP culture getting set. So almost like, say, in 2016, the monthly SIPs used to be around 3,000 crores per month. Now it's almost close to 15,000 crore plus. So it's an insane growth that you're seeing. A lot of new investors are coming, a lot of digital apps. So investing has become very simple. The awareness is already created. There's also the fin influencer ecosystem which is created. So overall, say 10-15 years back, we needed to explain what a mutual fund was, but now everybody already knows what a mutual fund is. So that initial baggage is done, and again, there's a lot of scope. It's just, if you look at the overall household assets, it's less than 5% is in equity, 50% in real estate, another 15% in gold. So which means that structurally over the next 10-20 years, we are still like very, very small in terms of the equity allocation. So while obviously the entire thing won't come all of a sudden, but even gradually that shift from physical to financial savings is happening. So which means you have a long runway of growth, and it's become easier to scale this, especially on the digital side. And then the whole ecosystem is now supporting, and everybody almost knows about mutual fund. So I think this is all these coming together is probably the reason why most of them want to enter now and then build it over the next 10-20 years.
Exactly. So, as rightly said by you, Arun, the runway for growth is there totally, which is strong and, picking up also. But having said that, from an investor's point of view, what exactly are the investors getting? What new are they getting? Apart from a company becoming an AMC or offering the service of an AMC, the kind of schemes that are being launched already exist in the market. We get that there is so much of appetite from an AMC's point of view to grow and, to make money and earn profits. But what are investors getting?
Yeah, see, as an investor, if you start thinking about it, On the debt side, if you really ask me, it's very, very difficult to differentiate, because all you can do is that you can either take higher credit risk or you can take more interest rate risk, which essentially means you put long duration products and try to play around with interest rate, play around with your duration. But more or less, all these are already getting done in existing AMCs, right? So on the debt side, to be fair, it is very, very difficult to incrementally add any meaningful differentiation. So my sense is most new AMCs will find it very hard to kind of build meaningful assets on the debt side. So mostly the focus would be on the equity side. But again, if you ask me on the equity side as well, SEBI has kind of, say, if you take a category like large cap, there's hardly any flexibility. You have the same 100 stocks, probably 30 stocks. Most AMCs won't want to do it. So net you're left with 70 stocks, and 80% has to go into these top 100 stocks. So in essence, 70 stocks is where most of them play. So it's very difficult to differentiate in a category like large cap. So if you look at most categories, to meaningfully differentiate becomes tough, but probably small caps, mid caps, flexi caps, large and mids, places where you have a mix of large, mid, and small caps are where AMCs might try to differentiate. But as a customer, at the end of the day, I need only 4 or 5 funds, right, across different styles or probably different market cap segments. And most of it is already catered to by the existing AMC. So in that sense, will they be able to give meaningful differentiation? That we'll have to wait and watch. But the differentiation will primarily be on differentiated strategies, differentiated process. And one area where most of them are working hard is on communicating better. Probably an area where a lot of AMCs lack is they don't communicate as well. So these guys can communicate well, and they're trying to take it digitally. They're trying to distribute it. So I think these are the 3 things. But as a customer, is there significant differentiation? It's still not too much at this juncture. Maybe the lower size at which they come can probably be a differentiator on the mid and small cap strategies. But again, we'll have to wait and watch, because they still don't have track record. So you might have to wait and watch for, say, 1-2 years, and then probably take a call, because net you need only 4-5 months.
Exactly. The last line that you said, Arun, because there is no track record, because we are talking about people's hard-earned money over here, and which is why a lot of investors like to play it safe, like to invest their money, in the existing AMCs that have better distribution and better fund management service. Obviously, even the new AMCs, they are making sure that they have the best fund management team, and they are reaching out to people and not only just selling their funds, but also trying to, financially give them the kind of literacy that's needed for an investor. But having said that, don't you think the bar is slightly more heavy on the existing names in spite of new names coming in the market, because there's so much of history attached to it, the track record, the fund management team, and people have been, if they're investing in these AMCs since a very long time, the confidence, and the comfort factor also matters.
Yeah, true. Actually, mostly all said and done, the question that most of us would have is that, say, if I do not invest in this new AMC now, will I miss something extremely, would my returns be dramatically lower compared to any other existing? So it's very difficult for somebody to say that, hey, I have a particular strategy or a particular fund manager who can disproportionately do well vis-a-vis all the other, because you are almost getting access to the same talent pool. It's the same tools that they have. It's the same ecosystem. So to say that somebody will suddenly have a unique advantage is a very, very hard sell. So my sense is most AMCs, if you look at it, at least the smaller AMCs which became big, they kind of did the hard grind for, let's say, 3, 4, 5 years. They build the track record and then kind of start communicating consistently. And so my sense is that it is still some time away. But at least for certain AMCs, let's take the example of White Oak Capital. They already have a track record in PMS. They were already managing a large book on the for foreign investors. So more or less, there are certain AMCs where you can get a sense of the track record as a proxy. So where you might, it is technically not a completely new AMC. So you still have some sense of track. So you'll have to see AMC by AMC, fund by fund, and then take a call saying, hey, is this completely different vis-a-vis my existing available strategies in existing mutual funds? If in that rare case, you can probably include, but most often than not, whatever a simple investor needs is more or less available in the existing funds and with a lot of track record. So I think the barrier for a new AMC to enter your portfolio should be much, much higher than what you use for other existing AMCs.
All right. So, Arun, now let's talk about the funds that these new AMCs are coming up with. What are the kind of funds that they are launching? I can also see a lot of interest towards the passive category that these new AMCs have, and a lot of these AMCs are sort of boutique AMCs also. They are not into all kind of schemes which are already existing in the market. But the kind of schemes that are being launched are mostly passive, or what's the kind of taste that these AMCs are having right now?
It's again a mix of it. So let's say you take an AMC like Navi. Navi is mostly taken the path of going into passive. And if you take an AMC like White Oak, it's predominantly equity heavy and active is the way. So again, within AMCs, every AMC is trying to play a different strategy. But broadly, from a passive point of view, the question is it's anyway a rule-based fund. There's hardly any difference between, say, if you're buying a Nifty 50, you can either buy it from your existing AMCs or except for the cost, almost everything else remains the same. And in India, it's very difficult to build trust. So my sense is on the passive side, because almost all passive products are now available. Name any AMC, you'll have the entire, almost the entire passive bouquet basket available. So my sense is purely on a passive basis. Right now, I have not seen any meaningful differentiation. Probably we might have to wait saying, are there any meaningfully differentiated passive products? But if not in the case of meaningful differentiation, my sense is pick up passive products from the existing AMCs because the cost is anyway already extremely low. And on the active side, obviously, White Oak is coming up with an interesting proposition that they have a balanced approach, which is not oriented towards any style, and they already have a good track record on the PMS side. So if in your portfolio you want to have a balanced or a blended kind of a style, then White Oak may fit in. And the 1-year track record has also been built and it does outperform. So maybe you might want to give it some more time if required. But there are interesting funds that are available. And if you look at other AMCs, there is Bajaj Finserv, which is launched. They say it's a mega trend is what is the style or that's the approach that they take. But again, we'll have to wait. We'll have to see how the portfolios are and what have they told and how are they communicating. So the key differential is more than the returns. Some AMCs are also like White Oak and Bajaj Finserv are also taking the approach that I'll also keep communicating my process so that by the time the performance comes, you'll also know how it is actually delivered. So I think communication is one end where the new AMCs are doing a much better work compared to the existing ones. And so we'll have to see how this evolves. But my sense is there's no urgency.
Right. I think that will be all. Thank you so much, Arun, for being on the show and helping our viewers with this topic today. Thank you.
Thank you.
On that note, we'll slip into a short break, but then post that, let's understand the benefits of being invested in a mutual fund for a long-term time horizon. We'll be joined by Gautam Kalia for this after this break.